Whether you want to learn to scalp or hold on and maximize your trading profits, you'll only learn and take something useful from this video if you understand my entire process, from planning to executing the trades. So pay attention. For the beginners and up-and-coming millionaire traders, you're going to learn from this video. Number 1, how I find this trade idea with my stock selection criteria. Number 2, the technical analysis and trade planning process. Number 3, executions, a comparison between scalping versus holding on to a little bit longer, and a profit comparisons. Number 4, the entry and exit strategies. And finally, how I manage the trade to let the winners run for 11x my total profits from only $2,000 to eventually $22,000. So I know $22,000 isn't exactly Lamborghini money, but it's probably enough to buy just one of these Lamborghini toilets. Hey, I did tell you I would own a Lamborghini one day. I just never said it was gonna be a car. So are you ready to learn from this live trading recap? Comment Lambo money down below and smash the like button for a chance to make it rain in this Lamborghini toilet. Okay, that's enough. Someone cut me off. First, I always like to start with the process of how I identify this particular stock in play for multiple days. So this stock, PDD, Pendual. Why is it so weird sounding? Pendual. We'll just call the stock PDD. So I identified the stock in play using my stock scanner during pre-market, and specifically over here with the gap down scan here. So this is on Stocks.io. Every morning I use the templates here to scan for different kinds of strategies, whether it's for gap up or gap down, for either small caps or large caps. So on that particular day, I use a large cap gap down scan. So I have very simple criteria, as you can see. I just have price set to greater than $1 per share. Dollar volume, I want to see at least $1 million volume traded pre-market. I want to see a 5% gap down, so that's why it's less than gap percent. I want to see a market cap, in this case, larger cap stock, so I have it set above $1 billion. So you can see there's a lot more added criteria or filters for you to include in your scanner, such as short interest, insider ownership, relative volume, and OTC stocks or types of ADR ETF if you're looking for that. And there's also even sector if you're looking for specific sector stocks in play. But for me specifically, I want to cast a wide net when I'm scanning for large cap gap down plays like this. So this is the scanner I use. So these are the results from today, which is a Friday. But on that particular day, on the day 1 here, this particular candle, you can see PDD gap down from overnight 140s to pre-market, you're trading around 115, and when you open, it's already trading at 110. So that's definitely more than 5% gap down. In fact, I think it was closer to 10 to 12% gap down by the time market opened. And the catalyst was that they had a really bad earnings report for Q2, including lowered guidance and a lot of downgrades from multiple analysts. And for this kind of strategies where I'm looking for quick scalps or multiple swings to a downside, this is one of my favorite catalysts, is when a company misses on earnings play. Okay, so now that you understand why this stock PDD is in play and how to select these kind of stocks to trade for this strategy, the next step of my trade planning process is to identify the key levels on these particular stocks. And as always, I always start from the daily chart. So if we're looking at the daily chart for PDD here, the first day of the gap down is here. You can see this thing sold off for multiple days after that first day of the breakdown. Now, you can see here, just from a quick analysis, this overnight gap down, you kind of broke down that 200 SMA line over here. Remember, stocks that are usually trending above 200 SMA are considered bullish. This particular indicator is used by a lot of big institutions, whether it's for investments, hedge funds, or even the big banks. So when you have a stock suddenly break down below the 200 SMA, overall, it's considered bearish. And you can see not only did it break down that 200 SMA, it also broke down that important key daily support here. You can see this key level around the 110, 112s area. This is the line in the sand multiple times. Once here in April and in March of this year. And again, this broke out of that range in November of last year. So this is an important support or key level here that's been tested 1, 2, 3, 4, 5, at least 5 to 6 times in the past year. So that's how you know, big picture wise, once the stock broke down the 200 SMA and breaking down below this key level, 112s, 110 area, hey, if it breaks down that level and stays below it, you may have a lot more downside. So let's switch our focus now to the intraday chart. You can see this yellow session is a pre-market session. The stock gapped down. You can see it broke down and just stayed in a downtrend for the entire pre-market session pretty much. And at the open, it barely bounced at all. At the open, you can see this huge flush in volume. And breaking down that line, we talked about 112's key daily support or key daily level. You can see it immediately broke down and cannot even retest that. This purple line here is VWAP. You can see the stock never retested VWAP intraday on the 5-minute the entire day. So that's how you know that intraday the stock was extremely weak, just like the daily chart we talked about. So now you can see how intraday and the daily chart lines up. Where can this stock go exactly after that 112 level breakdown? So if we go back to the daily charts again, you can see, the next level down, you have some small support about 109s here. Over here, some small little wick at the bottom of the candles on the daily chart. And then you don't really have any major support until, over here, 105s, and then you have down here at 101s, and even down here around $98 or potentially below. So you can see why it's important to highlight your key levels. The key level we talked about earlier, 112, because after you highlight the key levels, you know where the downside the stock has to go. And the same thing works to the upside as well for a breakout. So essentially, you can see this is how I knew potentially that once you